All right. So, good evening, everyone. This is Toby of FTS Strategy. And some of you, this is your first webinar with us, while some of you have been trading for a while. So, as usual, I would like to take everything from the top tonight and explain all these things you are seeing on the chart. So, I would like to explain everything on the chart here. So, the first thing we have on our chart is the Bollinger Band, which is this white channel. These three white lines are called the Bollinger Band. Okay? Then the next one, this red and the yellow. If you're just joining us, you can mute yourself, please. The red and the yellow are called the moving average. Okay? Then this is the MACD, and this is called the ADX. All right, so let me explain the function of each of these so we all know. For the MACD, the function, for the Bollinger Band, which is this channel, the function of the Bollinger Band is simple. It is used for three functions. It serves three functions, and the three functions are entry, exit, and take profit. Do you understand? So for entry, it helps us know the perfect time to enter a trade. Then for exit, in case the trade goes against us, we also use the Bollinger Band, mostly the middle Bollinger Band, to know when to exit a losing trade. And for taking of profit, you could either take your profit anywhere at the middle region here, either here or here, anywhere in between, or you wait for it to touch the upper or lower Bollinger Band before taking profit, depending on what position you're trading. You understand? That's what will determine where to take profit. So now the moving average, for the red moving average, which is the 48 moving average, its function is, the 13 moving average. The function of the 13 moving average is that it serves as a resistance or support area for the trade. That means for those of you, maybe a trade has happened and you want to re-enter the trade, okay, you can re-enter that trade at the region of this red moving average, which is moving average 13. I'll explain how that works in a while. So for the yellow moving average, which is moving average 48, that one really helps us like know the trend of the market, whether it's an uptrend or a downtrend. Like if it's below, that is telling you that the market is currently like going up. If it's cutting across the candle, like breaking in between the candle, is most likely ranging. And if it is above, that is more like a downtrend. So for the MACD, we also use the MACD to detect change in trend when a trend is changing from maybe an uptrend to a downtrend, like here. When this trend was slightly changing and becoming a downtrend, the MACD detected it. If you can see here, you see this candle started shrinking and the MACD was able to detect it. Can you see that it started falling and the MACD went below the zero line? Sorry. So I hope everybody can hear me, right? Because I'm seeing my network is kind of unstable. Please, can you unmute yourself if you can hear me clearly? Can you guys hear me? I'm not hearing any reply.
Yes.
Okay, all right, cool. So, yeah, I've explained. Okay, all right.
I hear you, Toby.
Okay, no problem. So that is what the MACD does. The MACD helps us to combine the entry here with the entry on the Bollinger Band. And lastly, the ADX. The work of this is to tell us when a market is trending or ranging. Let me change this to a cursor, okay? So the work of this ADX is to tell us if a market is trending or ranging. And according to the strategy, we only trade a trending market. We don't trade a ranging market. So how do you know if a market is trending or ranging? If this blue line, I don't know what color it is on your own chart, but any color it is, if it is below the 25 line, then it means the market is ranging. And no matter what the MACD or the Bollinger Band is telling you at that point, just ignore. Know that that is not a good time to trade. Do you understand? So also, if the ADX is above the 25 line and you see a condition coming, or you cite a condition on the MACD and on the Bollinger Band, then that is a valid trade to take. Okay, that is a valid trade. So the ADX tells us if a market is ranging or if it is trending. When I want to place a trade, the first thing I look at is just the ADX. Like when I'm scanning through markets, that's why I told most of the people that you can actually scan a market within 5 seconds and know if you can trade that market. And the first thing I check for every market is the ADX. If the ADX is above, then I check the MACD and I check the MACD alignment with the Bollinger Band to know when it is time to take a trade. All right, so how do we combine all these indicators now? How do we combine them to pick trades? That is why everybody is here. So this is it. Assuming when you open your chart, this is all you saw. Okay, immediately you open your chart. Now, the first thing you look out for is the ADX above the 25 line? Okay, so I'm sorry to mute everybody. Someone was having serious background noise, so I had to mute everyone. So the first thing you have to check is the ADX above the 25 line? And that is yes, if it is above, okay? So you check the MACD. Is there any shrink, or is the MACD reducing in size? Do you understand? Is the MACD reducing in size? Yeah, the MACD is reducing in size. And finally, is there any breakout coming, whether from the upper side or the lower side of the Bollinger Band? Is there any, I don't know, for those of you who are having bad network, you would get a recording of this. I'll make sure I record it. So that shouldn't be a problem. So you check, just like, let's use this candle for example. Assuming we enter the market here and we saw that there is a breakout, the market has broken the red line, which is the 13 moving average. We can see the MACD is shrinking, and we can see this is currently above the 25 line. Then we know a valid trade is coming. Okay, most times this yellow is not really like relevant. The yellow line is not really too relevant per se. Do you understand? The yellow line is not really too relevant. Yeah, for those of you who can't hear anything, dial in your audio. Some of you don't know how to do that. Dial in your audio using the mic. So once this candle broke above this red line, it was sure that an uptrend, an upsell was coming. That is a buy. Okay, it was sure that a buy is loading. So now, when do you take your trade? Okay, you can see this is shrinking. This is above the 25 line, and this candle just broke this red line. So we wait for the candle to break the middle Bollinger Band. This middle Bollinger Band. Then when the candle breaks and ends above it, let me use this. Let me use this crosshair. Let's look at this candle now. You can see how everything is aligning on that line. The candle broke the middle Bollinger Band. The MACD here, is already shrinking upward, while the ADX is above the 25 line. So at the appearance of this first candle now, this first one on the MACD, which is this one, we could have taken our trade. While some of you could wait for the second one, but let me just advise you, it's best you take your trade on the first one. Do you understand? It is best to take your trade on the first one. So immediately this candle, let me try increasing this chart. Let me try increasing so you all can see it. All right. So immediately this candle ended above the middle Bollinger Band. On this next candle, at the beginning of this next candle, each candle begins every 15 minutes. So let's say this candle closed, let's say this candle opened at 7 o'clock. This candle will close by 7:15. So by 7:15, once you see that this candle closed, at 7, immediately on that 7:15, you take your trade on this next candle. Do you understand? And you can sell the trade rode straight up and went straight up. Do you understand? So you could have taken your profit anywhere you like. As long as you're okay with the profit at that point, you would have taken your profit there. Okay? Now, let's look at this particular position here. This particular position here. Based on what I just explained here, this particular trade that happened here is an invalid trade. And the reason for this is because the ADX did not support this trade. In as much as the trade looked promising, can you see it actually went down to an extent? In as much as it looked promising, this candle broke the middle Bollinger Band. The MACD here was shrinking, but the ADX was currently below the 25 line. And as such, taking this trade was nothing but a gamble. Do you understand? Taking this trade was nothing but a gamble. But I know some people are risk takers and they want to take it, but you taking this trade means you are not trading the strategy, you are guessing. And that's why I told you earlier that when you guess, the market could guess you out also. You understand? The market could decide to play prank with your emotion and you just not understand your trading. Do you understand? So I just explained how we take a buy. How do we take a buy? We wait, we look first at the ADX, whether it's above the 25 line. Then we look for a candle almost breaking the middle Bollinger Band. Then wait for that candle to break the middle Bollinger Band. And we confirm. Okay, just give me like 5 seconds. Let me change the position of my MiFi. All right. So after we wait for a candle to break the middle Bollinger Band, we look for a shrink on the MACD to support that there is a change in trend coming. And once this breakout happens, we take our trade on the next candle. Okay, it is perfect timing. You have to know these candles end at exactly every 15 minutes. That's on the clock, 15 minutes past, something 30, something 45, and something o'clock. That is how those candles end. And for those of you who want to write the full profit, you can. There's a video where I gave you how to protect your profit. So that is for those who want to ride it till it reaches the upper Bollinger Band. Then you can ride that profit till it gets to the upper Bollinger Band. Okay. Now, let's look for when to accept accept a losing trade. Like for instance, you entered the trade now and that trade actually went against you. How do you know when to exit that trade? Okay, that's what I want to see if I can get on this chart. Okay, I think I've seen one. Let's look at this particular chart here. Okay, let's look at this chart here. Let's assume that this was a perfect condition. At this point, the ADX is above the 25 line. Then the MACD was, shrinking upward. The MACD was shrinking upward. And at this point, this candle broke the middle Bollinger Band. Then the MACD is currently on the 0 line, trying to climb up, and the ADX is still above the 25 line. Then at the beginning of this next candle, you now decided to take your trade. Okay, that you took a trade that the trade will go up. But see what happened on this candle. The market decided to come down. Now, when do you exit a trade? Immediately you take a buy or a sell. Any candle that crosses the middle Bollinger Band in the opposite direction, at the end of that candle, you cut that trade. That is a loss. You don't wait for the market to reverse. Let me explain what I just said. When we took a buy here, that the market will go up, the market reversed and broke the middle Bollinger Band and reversed downward and closed here. Immediately this market closes here, cut that trade off. Do you understand? That trade is a full losing trade. Do you understand? That trade is a loss already. So just cut it off. That is how you take your losses. That's how to know when a trade has lost. Don't forcefully just stay in the market and be using strong head that you want to get your profit back. You want to get your profit back. You can see how far the market came down again before it started going in your direction. So it's better you cut your small loss from here to here than now let the market reach here and out of panic, you are now closing the trade at this position. Now see what the market did to you. Because the market doesn't sleep, there will always be opportunity for you to take more trade every time. So why don't you take the beat you can take? You understand? Cut your losses early and look for the next available trade than using stronger to stay in the trade. Okay? So let me keep looking for another example. Let me see if I can see. Let me shrink this and see if I can probably see a sell signal. Let's go to volatility 75. This market has been crazy for days now. Now let's look at this particular place here. Let's look at this trade that happened here. Let's look at the trade that happened there. So look at this place now. Can someone unmute the mic and explain to me? I don't want Junior Sniper or anybody, but can someone else explain to me and tell me if this is a valid trade to take? This current place where my line is, can you unmute yourself and let someone please tell me if that's a valid trade to take and your reason for saying a yes or no?
Yeah, yes. Toby.
Yeah?
It's Victor.
Okay, all right. So is that a valid trade to take?
Yeah. No, it's not.
Okay, what is the
The
reason?
ADX is below the 25 line. ADX, the average directional movement
Okay.
is below the 25 line.
Okay, that's perfect.
Yes, sir.
That's perfect. I hope everybody understood the reason why I said this was not a valid trade. Hope everybody caught that. The reason is
Yes.
this. The reason is this.
Yes.
In as much as this looked like a perfect trade, you can see how it went up. But at the same time, the ADX was telling us another story entirely. The ADX said this market was still ranging and that this market was in a zone of consolidation. Consolidation means ranging, when the market is just dancing around the point and not really moving too much. And if you look at this side too, the market wasn't far from this consolidation that happened around here. See this? And the market was slightly moving closer to that region. And see what happened here too. There was consolidation at this region. Do you understand? So that was why the ADX rejected this trade. And even though you had squeezed the trade in to take it, do you understand? You could have been very lucky the trade won. But if one of these candles here had ended below the middle Bollinger Band, then it was time to exit that trade. That would have been your exit position when you take a buy up. If this candle here had closed below the middle Bollinger Band, it was time to take that trade as a loss. But as long as none of the candle closed below, it is still perfect to leave your trade running. And you can see how it touched the upper Bollinger Band, and you would have cashed in a good profit here if the ADX supported it. But since the ADX did not support it, this is an invalid trade. Okay, this is an invalid trade. So now I've killed two birds with one stone. I've been able to explain when to take a buy and when to exit a buy gone wrong. That is, if a buy trade goes wrong, when to exit it. I just explained that if you take a buy, let's assume all conditions have been met. The MACD is shrinking upward. The ADX is above the 25 line, and there is a breakout at the middle Bollinger Band. We take trades at the middle Bollinger Band. Once there's a breakout, you take your trade. Don't wait for, in short, these days, don't wait for the second candle that breaks out to end. At the end of the first candle that breaks the middle Bollinger Band, take your trade. Do you understand? Take your trade immediately a candle breaks the middle Bollinger Band and closes while all conditions are met. Take your trade on the next candle. But if after taking your trade, one stupid candle now decides to reverse and close below the middle Bollinger Band, that is for a buy. Just close that trade and accept your loss. Close the trade and accept your loss. You don't revenge with the market. If you revenge with the market will fuck you up. The market doesn't care. That is it. So now let's look for a sell. Before I now explain the work of the moving average, let's see if we can catch a sell signal. A sell signal. That might be tough. What I'm mostly seeing here is a buy. Okay, just give me a few minutes. Let me see if I can see a sell signal here. This is okay. Well, sorry, just give me. Okay, yeah, I've seen one. So this is, let's talk about sell now, a downward movement. So let's look at this. This candle it broke the 13 moving average. So immediately breaking the 13 moving average, we know this is a strong movement downward. Do you understand? In short, this yellow, this 48 moving average, you can actually remove it. It doesn't really do much on the trade. But this 13 moving average, once the candle breaks it, then there's most likely gonna be a strong move in that direction. So this candle broke the 13 moving average, and this small candle here broke the middle Bollinger Band. And at the same time down here, the MACD was already shrinking to the 0 line, telling us that a change in trend is upcoming. And the ADX is currently above the 25 line. Then immediately this candle closes. At the beginning of this next candle, here, let me change to a cursor. At the beginning of this candle, we take a sell. And we take that sell position till when it most likely touches the lower Bollinger Band, or you could close it anywhere around this region as long as you're okay with the profit. But for those of us that like riding and eating the full profit, then you move your stop loss to the positive. For instance, if the trade is here, move your stop loss to somewhere around here so that it won't reverse and give you a loss, so that your stop loss or your trailing stop will be in the positive in case this market reverses. You understand? And you can see that it was until it touched the middle Bollinger Band and closed outside it here that the market reversed back. So now, assuming, let's assume we took the trade here. Let's just assume, I want to explain how to cut your loss for a sell position. Let's assume it was on this candle, all positions were met, and you took a sell on this next candle, that it will go down. Then you can see this market went down small and reversed till it reversed above the middle Bollinger Band here and closed above it, sorry. So immediately this candle closes in the opposite direction above the middle Bollinger Band, just close your trade at this loss position. Do you understand? It is time to close your trade at this position as a loss. That is assuming all conditions were met on this candle and you traded a sell. But the market now, after like 45 minutes, it reversed up and closed above the middle Bollinger Band. Then on the close of this candle, before the opening of this candle, close that trade in loss. Do you understand? That is how you accept loss. The goal of trading is to make profit consistently, not making all your profit in one day, or make profit for 1 week and lose the entire profit in one day. That is not trading. You are gambling. You understand? So as long as you're following your strategy, I'm not saying you will win all the time, no. But I'm saying with this strategy, you can win 95% of the time. And I'm not just saying this for myself. I have seen students doing this for themselves. Amongst you, they just don't post to the group. You understand? They are very like coded people. But they share their results with me personally, and it's impressive. It is impressive. In 5 days, someone was able to build his account from about $30 to close to $200 just using the strategy. That's how impressive it is. The same thing. You understand? So one thing is to believe in the strategy. You need to believe in the strategy first. It is when you believe in the strategy would work for you. But if you don't even believe in the strategy, because maybe you've been losing in the past, then that strategy won't work for you because you'll be placing every trade in fear. And you don't trade with emotion, be it fear or happiness. If you trade with fear, you most likely make a mistake. If you trade with happiness, you most likely overtrade. So you trade with a stable mind. You don't trade when you are too happy. Sorry, you don't trade when you are too happy, and you don't trade when you are sad. You trade when your emotion is balanced, because only then can you enter trades with a clear mind. All right, only then can you enter trades with a clear mind. So now, I have explained how to take an up trade, which is a buy, and a down trade, which is a sell. Now, for a sell, if you want to ride after taking the trade day and you want to ride the profit to the fullest, you close the trade immediately one of the candle touches the lower Bollinger Band. You close that trade. That is, if you have the lever to accompany the trade to the fullest, immediately the candle touches the lower Bollinger Band for a sell, you close that trade. You see, if it likes, it should go to the pit of hell. It should keep going down to the pit of hell. I don't care, because I have taken the profits assigned to me in the market at that point. A profit at hand is better than a profit in the mind. That always note that it is the profit at hand you can spend. The profit in your mind, the market can still remove it from you and turn it to a loss. So you have to be smart. The market is not your father's land. It is not your mother's land. You don't sleep there. You get in, cash out quick, and get out. The market was designed to suck your money. It wasn't designed to make you profit. That is just the simple secret. The market is designed in a way to just make you keep depositing and not making you withdraw. Now you have to stick strictly to your strategy in order for you to be able to click that withdrawal button, or else the market will play pranks with you. So, what is the work of this red line, this moving average 13? The moving average 13 now serves as a line for re-entry. I said it's a support, and it could serve as a support and to serve as a resistance. But the reason why I don't want to explain that is because most of you will start entering trades that are not professional. Do you understand? Most of you will start entering trades that are not professional, all in the name of you want to forcefully catch a trade. This is it. Okay. Let's look at this. I'm trying to see where we could use that particular market. Okay, let's look at this place. Let's assume when this candle broke, let's assume all conditions are met here. Okay, let's assume all conditions are met. Then you take a sell. But when this sell was happening, you are not in the market. When this sell was happening, you are not in the market. So you got back to the market when the reversal had happened. Okay? And you can see this red line here. This green candle tried breaking it, even with the middle Bollinger Band, but it couldn't break it. And the next candle that came out was a red candle that dropped, meaning that this line rejected this candle from going up and sent it backward. So you'd have taken another trade, another entry at this point, at the beginning of this candle, and you close it when it touches the MACD. But let me just be sincere with you. I don't advise re-entry in trading volatility. I don't advise re-entry. In short, I shouldn't be preaching it. I don't advise re-entry. The only entry I advise is a perfect entry, which is the only thing I trade. Perfect entry, just like I've explained, in the past. Perfect entry. That is when all conditions are met. When all conditions are met, the perfect entry, that is the only thing I try to explain. I'm coming. Okay. I think I saw one here. Okay, yeah. Perfect entry like this, that is all I advise. That is all I advise. Just perfect entries like this is all I advise. So, once you miss an entry, there are various markets available below. Various markets you can trade. Just have the patience to check back in another 1 hour and see how the market is doing. But don't be like, maybe for instance, the condition was met here now and this candle has broken. Then you're meant to take the trade here. Then you now saw that, the trade has gotten here, but because it hasn't touched the lower Bollinger Band, you now entered. You would most likely lose. You might lose, and that will not, you won't come back and tell me my strategy is not working. No. Trade that you ought to have entered from here, you're now jumping inside the market here, and you can see how the market reversed against you. You did not even touch the lower Bollinger Band. That is why I always tell people the profit at hand is better than the profit in your mind. It is better after like 2 candle profits. Just close that trade and look for another opportunity. And there will always be opportunity. Now, let me explain something. You don't force a trade because the market is not looking friendly for that day. Just like volatility on 5 has been frustrating since like maybe yesterday now, that there is hardly a position to take on volatility 75. You are now like, by fire by force, you must take trade that day. Trading is not by fire by force. Oh. Trading is only when the conditions are met will I pick a trade. But if you try trading by fire by force, you would lose. You would lose. You don't trade by fire by force. You trade only when the conditions are met. Only when the conditions are met. If you trade against that philosophy, you would lose big time because the market doesn't give second chances. Once you miss that first one chance, that is the end. What you see is what you get. Do you understand? So for this, in short, you can trade this whole market without this two moving average. You can trade it perfectly without these two red or yellow line. Do you understand? Like I said, for a sell, wait for the ADX to be above the 25 line. Make sure there is a shrink from the MACD downward, and make sure that a candle is about to break the middle Bollinger Band. And at the end of that candle breaking the middle Bollinger Band cleanly, take your trade on the next candle. And after a while, cash out your profits. So also for the buy, know that the ADX is still above the 25 line. Look for a shrink happening here. Then immediately a candle breaks the middle Bollinger Band. On the opening of the next candle, take a buy and ride the profits up using the how to lock your profit strategy that I shared. I shared a video with everyone. If you don't have the video, you can message me after the lecture and I'll send you the video. So we have less than 6 minutes to end this free session. Okay, we have less than 6 minutes to end the session. So you can unmute yourself now if you have a question. Okay, you can unmute yourself if you have a question so that I can answer that. All right, I'm listening. Okay. Okay, I thought someone had a question. You can, or should I unmute you guys? Okay. Just Mr. Ezekiel, is that understood? Mr. Neleville, Mr. Okechukwu, Mr. Joseph, Engineer Noah, and Midday Fox. I hope this lecture is self-explanatory.
Yes, sir.
Okay. So you all know when to take your profits, you know when to cut your loss, and you know when to enter a trade.
Yes, sir.
Okay, so like I said, you don't force trades, you wait for them. That's why I call you guys snipers. You guys are snipers. Okay,